Hello everybody, Dr. Cherry here. Hope all is well with you. In this L&B Money Mechanics short, we'll talk about how the rise in historically low mortgage interest rates to what they are currently are having an effect on home purchase decisions. All right, let's chop it up. All right, now the rise in mortgage interest rates from their historical lows to where they are now has seemingly caused a big old case of the FOMOs. However, there is a couple of questions that you can ask yourself to help mitigate that feeling, that gut-wrenching feeling of the FOMOs, okay? Now, people tend to tell themselves that they purchase their primary residence for one reason and one reason only, which is an investment and to get that appreciating asset on their balance sheet. And yes, primary residences over time, 15 to 30 years, tend to appreciate in value and increase your net worth over time. That tends to happen. However, the primary reason we tend to purchase a residence is to increase our overall lifestyle well-being. Okay, it is a lifestyle choice because primary residences do come with costs over time. They have taxes, interest, okay? They have upkeep and a lot of other things, okay? We are investing into our lifestyle well-being. It's a lifestyle choice. Our housing preferences and how we live contributes to our overall well-being and how we choose to experience our life. And we save up in order to purchase this asset that, yes, by circumstance tends to appreciate over time. So ask yourself, why are you wanting to make this purchase decision? Is it to increase your lifestyle well-being? Is it going to contribute to your overall housing preference, your lifestyle well-being? If so, if that is yes, then you still want to consider going ahead with that purchase, and it will mitigate that feeling of FOMO, because if that is still consistent. And also, comparatively so, zooming out a little bit, interest rates comparatively historically are still pretty good. Okay, also too, you want to ask yourself, are you still financially healthy in order to make this move? Is your down payment still intact? Is your credit still good to obtain a pretty good rate? If so, then you still want to consider probably moving on with your decision. That will also reduce your FOMO, your feeling of FOMO, okay? And also, you control your term, your length of mortgage payment, okay, over time, and you also control your amount of interest that you pay over time. Why is that? Because the interest rate that's set that you enter into doesn't last forever. Okay, although one of my favorite songs is Make It Last Forever. That's that Keith Sweat right there. What's your favorite song that has forever in it, by the way? There's so many. Okay, back to the point. All right, but interest rates don't last forever. They're cyclical. So there's several ways that you can control the term and the interest rate of your mortgage payment. Okay, so there's several ways that you can do that. One, pretty popular, right? You can refinance over the course of your mortgage, okay? So you can obtain, when rates fluctuate, you can get a new rate over time. So you can refinance a couple of times, okay? You can also obtain a shorter term. So if you get a 30-year mortgage, you can refinance not only for a lower rate, but you can also refinance for a 30 years, or you can refinance for a shorter term in 15 years. You can actually get a recast of a loan. You can, in that case, keep your same loan, but pay down the principal. So you're actually paying interest on less amount. So that also reduces the amount of interest that you're going to pay over time. Also, you can adjust your the way you pay your mortgage over time. You can pay extra on your mortgage per month. You can round up to the nearest 100. That's a way of paying additional principal per month. You can split your mortgage payment into 2 times a month. So you have a full payment that you can make per month. You can take that full payment, divide it by 2, and make 2 payments per month. So you essentially end up making an additional payment per year by dividing your payment into 2 and making 2 payments per month rather than make 1. So that's another way you can pay additional principal per year. You can essentially just make 1 lump sum additional payment per year. All of these additional ways of contributing to principal reduces principal and knocks off years and interest off of your mortgage and reduces the amount of interest that you pay over time, and you control the interest and amount that you pay over time. Again, reducing that FOMO. Okay. All right. So you shouldn't have that much FOMO. You control a lot more than you do. All right. All right. Until next time, we'll chop it up again. Cheers.